Hi, everybody. Welcome back to Ox Talks. It is Tuesday, April 30th, 2024, last day of April. Hope you're having a productive day today and a productive week so far. I am buried in a monster project. It's a filing that I have to get prepared and ready to submit by next Tuesday. Yes, that sounds like a long ways off, but it's probably, I would say, conservatively a 50-hour project. And I need to just be dissecting it. I have to constantly be analyzing this stuff and going back and revising and reworking some theories, performing new research. So the videos are going to be spotty this week. I wasn't going to even have time to do one today, but middle of the day, I happened to take a break and I looked at the markets as they had just closed and noticed that the markets had a pretty substantial sell-off across the board. I saw the Dow was down over 500 points. NASDAQ was down over 325. I saw crypto at the time was down over $3,000. I think it's come back a little bit, but it's still down substantially. Gold and silver had a big sell-off today as well. Gold was down, I think, almost $40 or $50 an ounce. So look, we have a pan sell-off, it looks like, across the board. Oil was down. The only thing that I saw was up was the 10-year bond yield. And when I'm checking that about 20 minutes ago, was sitting at 4.68%, getting very, very dangerous and precarious. And of course, the US dollar index was up substantially. So keep in mind, I'm seeing a lot of articles today as I'm pulling up stories to piece a few things together to share with you. Get a lot of comparisons to going back to Lehman, the Lehman collapse, when everything fell apart at Lehman, and how, there was for a period of time, as I recall, I lived through it, all asset classes sold off. The markets got destroyed. Took 10 years for people to recover some of their losses there. And look at even alternative assets like gold and silver at the time sold off. I don't even think crypto was an asset or a class at that point. So be prepared for that. So what do? You have to diversify. You've got to make some smart decisions. And everyone's going to take losses. Everyone is, when this thing starts to really gain momentum to the downside, people are going to be selling their metals to cover their margin calls in the market. Those margin calls are going to accelerate, and that becomes a snowball rolling downhill. So please don't think that you're going to, and I'm not giving you financial advice, I'm just telling you what I witnessed during the last huge crisis and downturn, and that's what happened, folks. So best you can do is just diversify. Don't have all your eggs in one basket, but most importantly, have some dry powder, have some cash set aside, so you can cover expenses if things get really, really bad and you're positioned on the wrong side of something. Real estate as well. I'll talk about real estate in a second. So let's talk about the markets today. It says this out of zero hedge, stocks and bonds slammed after unionized and government workers send employment costs soaring in the first quarter. Right now, the markets are very sensitive to any information that comes out which shows that costs and prices are rising, because that is going to work against the whole narrative that the Fed is going to be cutting rates. And the more the markets start to price that in, the more the bottom could be more likely to fall out of these markets. So it says the ECI, Employment Cost Index, rose from plus 0.9% in quarter four to 1.2% in quarter one, well above the 1% quarter-on-quarter expected. It says that's the biggest quarter-on-quarter jump in 1 year, and it was above the highest forecast, which leaves the civilian worker ECI says up 4.2% year over year. And the largest contributor, it says, to the rise in the employment costs is the government, where compensation, it says, is up 4.8% year over year. And that's unionized service workers are seeing soaring wages at a record pace. So we have employment costs rising. We have a survey out of the Dallas Fed today that says that it suffers the zero hedge on the verge of panic. Dallas Fed Services survey suffers longest slump since Lehman. It says it was just capped off by a big drop in Dallas Fed's services survey, and that was the soft data that's been released lately. It says, which complements yesterday's Dallas Fed manufacturing meltdown. I did not cover it yesterday, didn't get a chance to put up a video. It says the headline print dropped from minus 5.5 to minus 10.6. That's the 23rd straight month of contraction in the survey. One more month, it says, equals the span of contraction around the Lehman collapse. It says, looking ahead, the picture was an ugly stagflationary one, with revenue expected to grow slower and prices expected to rise faster, with a general business activity expected to decline, the first since November of 2023. So, and they have a whole bunch of stories in here of, people giving their on-the-ground reports, small business owners, and it's very, very negative. The sentiment is starting to turn. I mean, you've had this developing over the last many, many months, but now you have a lot more vocal statements of people out there saying, look at the climate is not good. And on top of that, as we know, we have affordability of housing continuing to get worse. So it just keeps piling on. Another article today, Zero Hedge, affordability crisis worsens as U.S. home prices soar near record high in February. Home prices in America's 20 largest cities, it says, rose for the 13th straight month in February, the latest data released by S&P Global Case-Shiller today, up a massive 0.61% month over month, and what was expected was 0.1%. So it was 0.61%. They're expecting a rise of 0.1%. So that's a six-fold greater increase than it was expected in terms of the home prices in America's 20 largest cities. That pushed the year-over-year price up a stunning 7.29%, far hotter than the 6.70% expected, and that's the fastest price rise since October 2022. Since the previous peak in prices in 2022, this marks the second time home prices, it says, have pushed higher in the face of economic uncertainty. So I'm not going to break down the article too much more. I don't have a lot of time today. I've got to jump back on to this project, but when I see I pulled up a couple of the news sources today. I see all of this stuff hitting. I wanted to jump on and just touch base, highlight a few of the things that I saw. I saw another article, TD Bank is closing 20 branches. This came out yesterday, I believe, on The Sun. TD Bank is shutting down 20 branches, basically along the East Coast. If that's your bank and you guys are experiencing something there, let me know. It says on October 11th that it was reported that that's going to be happening. Most of them, it says, in the Northeast. Not exactly clear these locations, when they will shut down. It says the clients will need to find their new branch if they hope to continue in-person banking. So we're continuing to have a shuttering of the brick and mortar banks. And is that a sign of further things under the surface relative to the health of these banks? We'll have to wait and see. But look, I hope all of you are taking precautions from your personal situation, financial situation, to prepare for this economic collapse. It's no joke at this point. We have a lot happening, not to mention geopolitical pressures, everything else going on, protests across this country, the border's wide open. I saw something that they snuck in funding to actually accelerate and support immigration into this country from certain countries. So, I mean, there's nothing I pull up these days that looks to me to be encouraging. I'm not just cherry picking the bad news and coming out here trying to say gotcha and look as a confirmation bias or anything like that. I'm just saying this looks really, really bad. So we have to worry about ourselves, our families, our loved ones. We've got to fortify our financial situations. We have to make sure that we have the best job that we possibly can have. We're working hard. There are no shortcuts. If you can start your own business and have a side gig, consider doing that, because multiple streams of income, from my perspective, will be important as everything continues to go up in cost. I don't think we've even seen the tip of the iceberg yet on this thing. Well, I think we're only seeing the tip of the iceberg, unfortunately. So it's going to continue to get worse. Have some money put aside and try to fortify your position, pay off debt, stop getting into new debt right now, especially if those of you that are taking on credit card debt and carrying balances at 22%. That's absolutely crazy, because in the last downturn, the credit card companies, first thing they do is they came in and they said, we're going to slash everyone's credit limit down to what they owe on their balances. And then you're stuck having to make those payments. You don't have any more blue sky to pull more money off those lines of credit or those credit cards, or to swipe the plastic to pay for food or gasoline or medical costs, anything like that. So keep that in mind, because that's going to be coming again pretty soon, I bet. I'll leave it there today. Thanks for watching and subscribing and sharing the videos with as many people as you can. I appreciate that. I see we've once again dipped below that threshold, I guess 6,400 subscribers again. So I don't know what's going on there, but I'm so busy here at the office, I just haven't had time to look much more into it. Appreciate all of you, though. We have a nice community here. I'll be doing my workout this afternoon. For me, it's a way at the end of these days to just hit a mental reset and just decompress, get the workout in. It's a healthy way to do that and to try to minimize stress. If you're in a high-stress job, it's super important. And also, it's easy if you're in a high-stress job to start, eating, crappy food and start going down that bad road as well. Try to resist doing that. Try to have some healthy eating habits, work on the diet, exercise. I'm about 12 minutes today. I'm going to do my best to get some videos up throughout the week, time permitting, but bear with me. Everything's okay here, just really, really slammed with work, which I guess is a good thing. So thanks to all of you again. Have a great evening. Bye.